Hello, I am Angeline Ong, and welcome to your look ahead to Wednesday, the 6th of March. Now, we start in Australia with Q4 GDP growth rate reading there in view. The first estimate, 0.3% quarter on quarter, 1.4% year on year is what is expected. And then in Europe, it's really Germany and its trade balance that will be one to keep an eye on. The surplus that's anticipated, 21.5 billion euros. And exports are also expected to rise by 1.5% month on month. Pay special attention to what it says about exports to China, because as you know, those recent data points out of China, a big trade partner of Germany, has disappointed recently. From the UK, we're looking out for the S&P Global Construction PMI. And of course, the elephant in the room is the spring budget. Just looking at cable for you, because it is currently trading in a sideways pattern at the moment. I'm just drawing you these lines for you so you can see where the trend channel is, and it does look like a narrow channel, but the budget could change all this because very little in the way of detail has leaked out. And there are concerns, especially since the last Truss quasi-quartering malarkey in 2022. More interest, shall we say, has been given to the spring budget. The pound currently trading listlessly, as I said, and currency markets overall remain sluggish ahead of that spring budget, and also, of course, that Friday jobs number out of the US. Now, in terms of the eurozone data points, it'll be retail sales that we're looking out for, especially after British consumer spending slid in February due to bad weather, which kept shoppers at home. This is according to a survey which showed that households are still very cautious amid high borrowing costs and, of course, the inflation squeeze. From Canada, we are looking out for the Bank of Canada interest rate decision. It's expected largely to remain on hold. However, many polls... Oh, sorry. Somehow I missed that. Okay. Hi. Okay, so when I say inflation, inflation squeeze. Okay, ready? From the US, as I mentioned, the key data point this week will be the Friday's jobs report, but we do have ahead of that the ADP employment change data and JOLTS job openings print as well. Of course, Jerome Powell could move the needle, depending on what it says at his testimony. And we also have EIA crude oil inventories. From Canada, we have an interest rate decision. They are largely seen, the Bank of Canada largely seen staying on hold. However, according to a poll by Reuters on economists, the majority of economists polled by Reuters suggest that the Bank of Canada is set to cut its overnight interest rate in June. However, all bets are off, because until the Fed and the European Central Bank deliver their first cuts, it's anticipated that many other major central banks, like the Bank of Canada, will stand pat on their interest rates, especially since inflation in Canada has fallen, but still remains quite sticky, especially when it comes to shelter cost inflation. Last but not least, over in the UK, we have numbers, full-year numbers, really, from Legal and General, Tullow Oil and Rathbones. And that's it now. For more market-moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads-up to the US trading day. And my colleague, Jeremy Naylor, will be on at 7:30 on Early Morning Call to do the same to the European trading day. Follow me on Twitter at Angeline Ong. This is IGTV.